All right, let's start with the smartphone data because just over 1.2 billion shipped last year. Sounds like a lot. That's according to IDC. It's actually the lowest since 2013. IDC saying there was significantly dampened consumer demand, inflation, economic uncertainties. But John, this is like, it's one thing to say, OK, we're coming off the pandemic. There was, I guess, a surplus, but we've pulled way back now. Wow.
First of all, I'm not the father. Second of all, yes, we have. So there's a demand issue here. Remember, these are shipments, not sales, right? So there's inventory buildup. That's an issue in there as well. And it's Apple, but it's also other smartphone makers who fared even worse during this period. And so the implications for 2023, like once we get past the holiday quarter, how long does it take you to work through excess inventory? Does consumer spending pick up again, especially given the fact that the savings rate is coming down, credit card balances are high, and Jamie Dimon says the consumer might tap out in June.
Are the phones getting better enough, fast enough to induce people to change?
That's not really the issue here, Tyler. What the biggest culprit, in my view, is Apple, because those production snags that we saw last fall that caused all those missed production in China, caused all those missed sales. This is 1 week from today, we get Apple earnings. The number one question I read in all the analyst notes leading up to that is the demand going to carry into this quarter? Because they literally couldn't make the phones in time for Christmas.
So if this was a supply issue, not a demand issue, then actually that's bullish.
But
for
on the Apple
earnings.
end, but the demand is falling on the lower end, the Samsungs and those Android devices. That's where you're seeing the demand.
So then I come
fall.
back to the question. I mean, if it's not an Apple-specific issue, though there are clearly specific issues pertaining to Apple, is it not true that people are holding back and holding on to phones longer because the improvements in the phones
that's been the case for years.
Aren't as great as they were 5-10 years ago?
It's not necessarily about the improvements. Apple's actually had a pretty good cycle with the 14, 13. Part of it is also the carrier subsidies. What incentive do the carriers have to really discount a phone when people aren't buying that much? Right? Like if the economy's slowing overall and they're not leaning into, say, 5G deployment right now, do they really need for that phone to be the salesman for the network the way they did a couple of years ago? So if they pull back on subsidies and consumer demand is waning a bit, all of that affects whether the consumer feels like it's time to buy.
The bigger picture here is amidst all of the supply chain issues and everything else, there is still that macroeconomic backdrop where consumers might just feel a little bit more cautious about spending. I mean, a smartphone these days costs anywhere from $300 to over $1,000 for the high-end Apple ones. If you have an environment where you're paying $7 a dozen for eggs, you've got food costs soaring, you've got a lot of people feeling like their paychecks are not catching up, it might just weigh a little bit on consumer sentiment. And you get a feeling like if those things, and by the way, the news cycle doesn't help because every day, how many CEOs come on our air talking about the word recession, 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 recession? At some point, it's got to be like, okay, maybe I should be a little bit more careful.
Not to mention all the layoff news that scares people.
Well, speaking of layoffs, IBM is set to lay off about 1.5% of its workforce, about 3,900 folks. There you see the stock down 4% today, or $5. It's, of course, joining a growing list of tech giants who are doing this.
So the issue right now is it's almost like a self-fulfilling prophecy for technology or media and telecom in general. You had some of the biggest players early on set the precedent. And what that's in essence done is given many of these tech firms who arguably, it's given them absolutely.
Starting with Elon Musk and Twitter.
Right. So this is the idea that this is, I mean, to kitchen sink it is to be a little bit crass and a little bit simplistic about it. But this is a quarter where you could see a lot of tech CEOs coming out and announcing these types of cuts that are not massive in nature and scale, but enough to at least kind of right-size their cost structure. And they won't face the kind of blowback that they would normally see in a normal cycle because every one of their peers is doing the exact same thing right now.
What's noteworthy here, John, is that their stock is down. Some of these tech companies have come out with job cuts, and the stock responds positively because investors go, you overhired, we have to pull back, we have to right size. Why in IBM's case, I mean, are the layoffs telling something perhaps the market didn't sense about slowing demand or competition?
How to put this kind of politely in the sense that any layoff is significant, certainly for the people who are affected. And you hate to see that happen. For IBM, this is a really small rounding error. It's almost something that you wouldn't even announce in a different economic time as IBM churns through its workforce. I think the reason why the stock is down today doesn't have to do with the layoff, unless some investors maybe feel like it wasn't big enough. It has to do with what some analysts would call earnings quality, the fact that the software number wasn't as much up as they might have hoped, and plus IBM's helped by a stronger mainframe cycle right now, so that helps on the hardware side, but that doesn't necessarily stick around for quarter after quarter after quarter. So I think, IBM's had a pretty good run. It was actually up last year where others were not, and so, in this environment, maybe
the revenue was pretty good, right?
Right, but there were also cash flow concerns. There are some issues with regard to how the cash flows are shaping up and the growth of those cash flows in the future that have at least some analysts and investors taking some pause with regard to IBM's results.
Well, and IBM also, Steve, this was a stock finally everybody was excited about. To John's point, we're coming off the performance last year, and it's like, wow, this is what they're bucking the trend. They're turning things around. Now it seems like we're calling that a little bit into question.
Yeah, last year, as big tech got wrecked, IBM, of all names, was the one that outperformed the rest of their peers.
Right.
And look, we see the stock down today because of this.